I'm here today with Phil Millo and Benjamin Dives to explore and discuss the launch of the world's first Bitcoin bonds.
Hi.
Hi.
So Phil, what's so exciting about the new Bitcoin bond?
Well, this is, I guess, the first time that the world of traditional finance has properly intersected with the crypto world. I mean, I think that's the kind of the reaction that we're getting, that these Bitcoin bonds, in some sense, represent maybe the end of the first wave or the beginning of the second wave. And really, it's just because these are quite a traditional financial style product, i.e. a bond denominated in the same currency that they settle in, except it's for digital assets. So there's been a whole load of so-called Bitcoin bonds or Ether bonds which have been produced in the past, but invariably things aren't quite what they seem. So you would put your Bitcoin in or you put your Ether in, and then it would convert to dollars inside, and then the returns you'd get would be stable but dollar denominated, and therefore when they got converted back to Bitcoin you'd get a variable amount of Bitcoin. Well, that's great if you're all about the dollar. If you're all about the Bitcoin, you want something a little different, and what we know, and I think lots of people watching this know, is that there are increasingly quite a lot of people who are all about the Bitcoin, and so we wanted to give them something that was just very traditional, very obvious, a Bitcoin denominated bond. You put Bitcoin into it, it's calculated in Bitcoin, you get a fixed set amount of Bitcoin back every month, for as long as the bond lasts, and then you get all your Bitcoin back at the end, and there's no fiat anywhere near it. And they've had proper ISINs allocated to them by Clearstream. You can go to a Bloomberg terminal if you've got Bloomberg terminal, and you can look up the ISIN and you can authenticate it, and there it is. And they've had proper CFI codes allocated. So this is a proper, institutional grade product. Is just denominated in Bitcoin, and I think this is the first time that the fiat world has properly now intersected with the crypto world. I don't know if that's what you think too.
Absolutely. I think what's really interesting about this product from our perspective, so we are the prime brokers for this product, and our background is very much about cryptocurrency and finding all of the intersections in the traditional fiat world, whether that's launching the first UK exchange with a UK bank account, or all the way through to both digital custody and traditional custody. Being given the opportunity to act as the prime broker for this is huge for us, because we think it is an absolutely game-changing product. It allows the traditional world of finance to engage with a structured note or a bond in a currency that they traditionally have never really understood very well, and for the cryptocurrency enthusiasts, the long-term holders, to have something as grown up and impressive as a product that is recognised in the traditional financial world. And so we've had an enormous response to the initial piece of news about the product.
It's interesting because I guess we've been working on it for a while, so it's sort of old news to us. And then when it came out, just before it came out, there were a number of times I was sort of speaking in front of an audience, and I'd sort of say, in confidence, you're going to see this in the press probably soon, and I get a spontaneous round of applause, and I'd have people coming up to me afterwards and shaking my hand, and not because they necessarily wanted to buy it. I mean, I think with any product launch, you get people to go, oh, that's great, I'd like to buy some, people who aren't interested. Regardless of whether they were interested in it at all, people were sort of congratulating me and congratulating us, and that's the first time I've ever been in that situation. It was just unbelievable. And at one point, it pretty much stopped the panel, and all the panel started clapping. It was just unbelievable. And I think you can sort of see from the way it's been covered that most of the coverage has been about the fact that it's a game changer, as opposed to it being, like a sales pitch or something like that. So if you come out with an iPod or something, it's about where do you get the iPod or where do you get the iPad. The press coverage really has been about the way in which this is disruptive and the way in which this is a game changer. And as I say, people have started to say things which wasn't how we were thinking about it, this is the end of phase one, or I don't know what the beginning of phase one was, or this is the beginning of phase two. And this wasn't language that we'd thought of, but but I think I get what they mean, because these are Bitcoin. Just think about how crazy this is. This is Bitcoin denominated bonds. There's no fiat anywhere in the structure. You can look them up on Bloomberg. They have a Clearstream ISIN, and contained in the Clearstream ISIN name is something like FOMO or HODL or Lambo or Moon, and it clearly says XBT, which is the way that the financial world is now referring to BTC. This is the overlap product.
I think we couldn't help ourselves but put a little bit of the traditional crypto world.
You couldn't help yourself.
Well, right, yes.
I was going to call them something like 3-year 7% or something.
Yes. And both Phil and I, when we went to Bloomberg a couple of weeks ago, we were just sort of waiting. I mean, if you've been to Bloomberg, it's the most extraordinary building. It's like sort of a combination of a cathedral and Noah's Ark, where capitalism is the god.
Yes.
And we were sort of sitting waiting for to meet someone there, and just kind of casually typed it in, and we couldn't really believe that we'd done something so extraordinary as to sort of bring Bitcoin into the heart of
and nor could they, to be fair. Nor could they. Like, they were about to say, well, are these things real? And there you are, their own term, and they go, oh, right, okay.
We better get the editor down.
Yeah. So, came down in 5 minutes.
So a few things. How does it work? So if I'm interested in buying these or getting access to them, what would I do, Benjamin?
So you can go to lbxtrading.com. You can fill out a short form. Someone will call you back. And they'll go through, firstly, this is a product that's for people who are sophisticated, in the sense that if you've bought some Bitcoin already, then you have an understanding of the category of product that you'll be buying. And so someone from the team will speak to you and understand exactly what your intentions are, what's the reason that you're buying this, and to help you then understand which one of the 4 different products there are that might appeal. We know of a couple of people who've said, actually, I want a little bit in all 4, so that they get some short-term return and some long-term speculative return. But the hardest piece, I think, for most people to grasp is that there is absolutely no relationship to fiat. And so most people go, oh, so if I put in Bitcoin, then what happens if the market goes up and down? And then suddenly they realise it makes absolutely no difference, because all the returns are generated in Bitcoin. It's Bitcoin in, it's Bitcoin out, and so it's for that reason, that kind of zero fiat concept, that I think people are most excited, because normally in a product like this there'll be some kind of hedging mechanism going on, and actually if you're building a portfolio across the financial services world, and you want something that's a purely Bitcoin denominated asset, there's not a lot of things that you can do. Most hedge funds don't really want the hassle of buying Bitcoin and putting on a ledger and giving half the key to one person and half the key to the other and having to manage that asset. Well, with this, they can call us up, they can tell us how much they want, send us the Bitcoin, or if they're currently holding a fiat position, we'll perform the trade for them at pretty much close to spot, and then get custody that Bitcoin on behalf of the collateral manager.
Yeah, and I mean that's a really excellent point. I mean, a lot of the work that we do outside of cryptocurrency is very much in alternative assets, right? So whether it's trees, whether it's anything else, we're very used to things that aren't actually denominated in money. So trees is a great example, right? Trees grow if you do pretty much nothing to them, and so you can, if you hold trees, just constantly think of them in terms of their dollar value or their fiat value. But not everybody does, and not everybody should. And think how crazy it is just for the moment, to do what everyone is really focused on with Bitcoin, which is a Bitcoin ETF. Now, I'm not saying a Bitcoin ETF won't happen. In fact, let me say for the record, almost certainly will happen. I'm sure there'll be lots of Bitcoin ETFs. I'm sure the next thing that will happen is that those get included in normal people's portfolios for better or for worse. But the reality is that you're taking Bitcoin, which doesn't really correlate with, let's say, the equities market, and then you're putting it into a structure which is on the equities market, and therefore in financial terms you're doing something called ramming it full of stock market beta. You're definitely making it likely to ascend and fall with the swings of the market, and that is a kind of a slightly crazy thing to do. We've seen that in a listed private equity. That's exactly what people did then, and that may be a crazy thing to do, but it was certainly very popular, and I'm sure Bitcoin ETFs, when they come out, will be very popular. But a more natural thing to do is to say a Bitcoin bond where, as you sort of said, it's not just that it hasn't got any fiat inside it. There's no fiat exposure. Whatever the dollar or any other fiat price of Bitcoin may be, that's irrelevant. Because you put Bitcoin in, you get Bitcoin out, for better or for worse. So I think we always thought that the natural appeal for this, the natural market, would be people who already held Bitcoin, the so-called hodlers, and were not planning to sell it for a number of years. And that therefore, if they maybe put 10%, 20%, 30% of their Bitcoin wallet into something like this, or a range of the different durations, well, all that was going to happen is they were going to end up with more Bitcoin at the end of it. I think what we hadn't bargained on was the extent to which the story would capture the imagination of the community, both communities, beyond the market appeal. So regardless of people not being in that category, they're fascinated in just the story itself, which is amazing.
It is, and I think where we've seen particular interest are where there are family offices and funds who want to do something with maybe 1 to 5% of their portfolio value, where they're not going to be able to get the kind of returns that you see in Bitcoin, in the rest of the market, and so as an opportunity to give them access to something that that does have kind of 30% volatility in a given month
against the dollar.
To be able to add that to their portfolio, I think is extraordinary.
And I think now we're probably on quest is slightly too sort of hysterical a word to use, but certainly a sort of a gentle mission, I would say, to produce a roadmap of grown-up products for the crypto world, which feel very familiar to the financial world. I don't think we can quite say what they are. And we're not just talking about, bonds and other cryptocurrencies. There are other things which I think will be just as disruptive and just as exciting. I don't think they'll have as much as an impact as this, because I think this is the crossover product, and now we've crossed. But I think there are a number of really quite obvious products that we're in the process of producing, which we'll be announcing over the next sort of few months.
So if I had some Bitcoin and wanted to get some of these bonds, Benjamin, do I have to buy some special software or a special wallet, or what happens next after I contact you and fill in my KYC details?
So once we've onboarded you, we'll give you a wallet address where to send the Bitcoin. We'll give you then a receipt, a certificate of the amount. You'll then get the opportunity to choose whether you want your monthly payments sent back to your original wallet or a different wallet, or you get the opportunity to put that onto a prepaid card, which will allow you to then spend your interest payments as you would, anything else.
I mean, that in itself is an incredible feature, but almost gets kind of drowned out by the noise of the big news. I mean, that's amazing.
Yeah, and we're close to kind of announcing that. So, kind of watch this space. But I think we our intention, partly the reason why Phil chose London Block Exchange, is to just really simplify that process for your average punter who, is keen to sort of both have their cake and eat it, as it were, where they're sitting on their, a pile of Bitcoin, and actually to be able to take back some of that every month and spend that on whatever they like, I think is a really novel component. And I think that it is different to some of the Bitcoin lending platforms that we've seen, because a lot of those don't really have a lot of substance to them. You're taking on quite a lot of counterparty risk, and I think that's kind of where this product really kind of differentiates itself.
Well, that's a very interesting point, because you can get Bitcoin loans out there, but essentially, well, they're not institutional grade, but they're pretty much tantamount to an unsecured loan. Well, that doesn't necessarily mean that the credit risk of the counterparty you're lending to is bad. It might even be quite good, but that's very different to the kind of securitization which we're affecting. And if I look back at the way in which the banks used to do bonds, which was based on bond platforms with usually huge amounts of capital pledged and a separate credit rating by S&P or Moody's. Again, those were often effectively unsecured loans to the platform. Doesn't necessarily mean that the credit rating was bad. It was certainly investment grade. It was certainly rated as being investment grade, regardless of what happened. But in these particular cases, the bonds have been segregated into a bankruptcy remote compartment in a Luxembourg securitization vehicle, and it's a very different situation. So these are probably the ways in which it should have been done always, really.
So everyone really excited by all of this. What's a quick 1-2 minute thing I should be doing, having watched this video so far, Benjamin?
I think first thing to do is register on lbxtrading.com, fill out a short form. One of our team will call you back, and kind of take it from there. I think that's probably the easiest way of.
Well, they're designed to be sort of easy, right? They're designed to be straightforward to understand and straightforward to engage with. And I think that's the great thing about LBX trading. They're not just people who can do the settlement. They're not just people that have, through LBX custody, a properly regulated custodian. They also have a mission to educate and inform. And I think that's why they're the perfect sort of prime broker for this. So it'll be very easy. You literally just go to lbxtrading.com and it'll happen very quickly.
So Benjamin, I'm a holder of Bitcoin, as quite a lot of the audience are. I'm listening to this, but I'm wondering, is this all too good to be true? How is the bond structured, and how are the interest payments funded?
So Argento have issued the bond. The collateral is managed by the collateral manager, who lend out Bitcoin on a collateralized basis to institutional parties who want, for example, short-term borrowing. If they, some financial institutions might see that the price of Bitcoin is going down and might want to cover off a position for a couple of days. And so there are a number of other companies that also offer short-term lending. And so, that's essentially how the returns are generated. It's a bit like if you're a margin trader on a platform. You might want to borrow some Bitcoin to cover your position for a couple of days.
And because it's a securitization that's probably structured at Luxembourg, then there really isn't any credit counterparty risk, to use a financial term, with the Luxembourg issuer. Even in a crazy scenario where something were to go wrong and the whole platform were to fall away, the actual holders of the bond end up having proper title to the collateral that was securitized. So it's very different from the way that the banks used to structure bonds, which were pretty much unsecured loans to the bond platforms, really. This is much more properly structured.
Benjamin, what happens with the huge volatility of the Bitcoin price? It was down at $1,000, goes up to 20, comes all the way down to 3 or 4. What happens if it goes suddenly up by 50% or down by 50%?
Well, for bondholders, absolutely nothing, because there's absolutely no fiat anywhere in the product. There's absolutely no fiat exposure, and there's no need to hedge it. So if you're a long-term holder of Bitcoin and you just want to grow your Bitcoins, you put them in the bond and you receive interest payments in Bitcoin. And so for some categories of speculators and holders, this product is actually ideal.
Yeah, I mean, it's we've said it before, but the the people that this product was really designed for are the so-called hodlers, which I guess we are too, right? People who've got Bitcoin. We certainly haven't got. Yeah, exactly. We certainly haven't got time to think about trading it. If you're a crypto trader, this is a fascinating product, but you do all sorts of crazy things and you're not interested in it. If you haven't got Bitcoin, this is probably has interest for kind of socio-political reasons or for other kind of reasons. But the people who I think it is really going to appeal to and who it is appealing to are the hodlers who've got Bitcoin and they're not planning on selling it. And so, they plug a small piece of their wallet into something like this and what's the phrase that someone used the other day? It just makes your Bitcoin grow bigger, I think was what someone said to us.
And just a question at the back of my head, if they're going to be bonds for years and years. What happens if I fall under a bus or drop dead in the morning, Benjamin?
Very dramatic outcomes for you. I think your asset will fall to your the will holder, I would imagine, or the person, the beneficiary of your will, and that would the title to the asset would transfer to them according to your wills.
Well, because the critical thing is that the bonds have been properly custodied. So this is, again, something which you get at completely by accident, right? So we hadn't noticed this until after we'd structured it. But of course, the digital assets themselves, I don't think it's possible today to have those held by a regulated custodian. Once you put them inside the bond, it is, because that's now a security which absolutely can get and is custodied by a regulated custodian. So actually things become much more straightforward. And then more than that, it turns out, and this was incredible, there are even countries in the world where it's apparently against the law to hold raw Bitcoin on your balance sheet of your company. And yet, if you do something like buy one of these bonds, not only are you now allowed to hold the bond on your balance sheet, it's probably a breach of whatever gap you're operating in not to. So these would be classed as held to maturity securities, which means you would hold them at the same 100% Bitcoin price that you bought at, and then I guess mark them to market probably in whatever currency your balance sheet operates in. And so all these other markets have opened up sort of post-structuring. It'd be very nice if we said, oh yes, we thought of that. We didn't think of that at all. So it's been very interesting. And some of this, by the way, has been told to us by people who've been responding to sort of news stories about this.
So, gentlemen, thank you for your insights.
Thank you.
Good luck with onwards and upwards with the Bitcoin bonds.
Thank you very much.